Okay, what's going on? Good evening. This is going to be a daily recap, the DRC, right, for um, Monday, July 7th, 2025. Today was today was one of those days where for me personally, I just needed to be a little bit more prepared. I came into the session thinking that I had everything marked up. Looking at ES after going through some of the group chats and just looking everywhere online, I realized that I never marked those previous day or that the high on day, right? So the high on day I had never marked, um, which kind of set me in a situation to where I was viewing the markets from the wrong perspective in a sense, which is, every day you're not going to just be perfect. There's going to be progression in trading, and you're going to start noticing nuances and different things that you can take advantage of, right? But to say that there's actually perfection, right? There's really not, there's perfection in the eye of the beholder, right? Because, what one person, lines up as edge and, could be a 5 point risk for a 15 point gain. It could, I mean, that could be perfection, right? But the one thing I'd say you want to do is you want to be always progressing in this skill and this craft, okay? And so, really quickly, I wanted to show this. This was something that, I just personally wasn't looking at and didn't see at that open. That's something that I, definitely should have noticed, which was ES and NQ, right? So if you look at the 1 hour comparison, right, you look at the pre-New York, the pre-market, pre-snap read, one thing you can notice is that we were actually making lower highs, right, when we were actually sweeping the liquidity on ES, which is typical, right? We were used to seeing stuff like this. Now, the one thing that I didn't have identified before I started the session was this high, right? So in my eyes, right, at one point, I was pretty much seeing this as the high of day, which obviously it was the high of day after it took the high of day. But I just had never seen that they drew on that liquidity on this on ES. Now, as you guys can notice right here, they never drew on the high of day or that overnight liquidity on NQ, right? And we started to fall off going into New York. So that was kind of already the issue for me, was just like looking at a 4 hour, looking at a daily, right? We were wanting to see prices lower. Um, Excuse me, this is last week, and this is last week's market open. So just kind of having an idea what that price was as well. But trying to see if we were going to come down to that 62.25, possibly break this demand candle here and start to make our way down, right? And that's pretty much what we're starting to see after we took, um, all-time highs here for ES, and we're starting to we anticipated to see breakdown. We anticipate to see those long positions, right, taking profit, right? So let's see. Um, what we've seen in here. So then let's come in and jump straight into NQ, and we'll go 1 hour and 15 here. So let's go 15 and 5 though, just to kind of, oops, sorry. Let's go 15 and 5 so you can really see the scope of what I was personally seeing. Now at New York Open, to me it was, pretty choppy. I personally thought when you looked at New York Open that it was definitely pretty choppy. Um, The other thing was I don't know how this happened, but it moved my market open here really quickly. Give me 1 second. Okay, cool. So I make sure it's a nice spot. Okay, so it was just pretty choppy, right? But like just having that higher time frame context and location would have made it a little bit easier if I would have, like I said, framed that up. But coming into it, what I was seeing at New York Open was this would have been 825 to 830. This would have been 830 to 835. This candle right here, as you guys can tell, is very, very disrespectful, right? So they drew on the overnight liquidity. So if they were trading anywhere between 3 and at like 4 a.m. time, right, and had their stop loss at this aka support level low, the 22,910 areas, whatever, they came and they ran those individuals right in the beginning of the open. Now, one thing I'll say that I started off the day doing pretty well was being patient for a setup, right? Because I really wasn't looking for a 1 minute setup. I wasn't looking for um, really anything until we were to get that draw on that previous day low. Like I really wanted to see a draw on that previous day low before I decided to get in. But I also know this mantra that I do follow, which is called noobs buy tops and sell bottoms, right? So as I'm watching Rich Retail going into New York Open, as we're approaching this low, right, in this area here, like we were here and then we broke lower. As we approach these lows, price basically started to break the 22,900s, but it wasn't going lower and drawing on that liquidity to go lower. So when I seen that 15-minute dump candle that took out these traders here, I started to see that sign for me to possibly be able to enter. Now, I like to personally enter in the first 15 minutes or last 15 minutes of an hour, and I like to take 15 and 5-minute edge setups. So when you look at this candle here, 9:55 going into 10 a.m., this was the area where, those New York shorts, it was so choppy. They made, like, the price action was pretty good, but it was just very choppy. So you had a lot of this here, price runs up, and then what'd you get? You got a lower low close. Then you had the rally up, price failed to ever go past that supply candle, creating another lower high. And then what'd you get, right? After that, right here, another lower low close, right? So I was being patient and I was still waiting for price to deliver that previous day low, and it just wasn't getting there. And then we seen buyers step in here from 10 to 10:05, and I seen that candle that I like to see, right? And I was anticipating that, okay, we're seeing that first sign of strength. We're holding the 22,900 level. So I ended up entering. My entry ended up looking like this, just so you guys have an idea. Replay mode. All right, so my entry looked like this. I was going for two contracts here. Buy, stop loss was at that low right here. And then my goal was to give this back above New York Open, above market open, or above these wick areas. So if you guys can kind of see, my idea was to see price go above these wicks and into that 15-minute supply and possibly higher, right? But that was obviously the wrong idea to have in that situation. And so then price, just kind of show you how it plays out. So when price started to extend above point of interest, right? I have a mantra that I follow: protect or pay yourself at point of interest. So I had two contracts on the board. What I did was I slid that first contract, right? That first stop loss, as I started to slide that into this area here. Okay. And so I wanted to show up on the other window as well. So I started to slide that risk at this point right here, right on a 5-minute. And so as you can see on the 15-minute, we had higher open, higher close, higher open right here for 11 to 11:15, another higher close loading, right? So price was starting to actually show strength inside that 15 5-minute play right before it was going to the lows. Now, what happened for me after this was when price started to come back down, it ended up knocking me out of one of those contracts, right? Because you're not going to be able to see it because it happened so fast on this 15 and 5. And so what we could do is we could just go ahead and just hypothetically sell one in this area, right? So we're going to buy, so we'd sell one here. And then I had the remaining of my risk was right here, a little bit in profit in those 904s. And then the next minute that we ended up getting, the next 15 minutes, or I think it was like 20 minutes, price just completely sold off. So this is what it ended up looking like. All right, so price continued to go again. And so when this actually moved up, I was looking to trail my risk on the remainder up to here, right? But then ended up trailing it just to here, right? So I ended up just taking that 22,910 area. And then price had that one sign of weakness candle, the 22,950. I kept my risk in the same area, right? Boom. Price came back down to the first level again. And then I believe price just destroyed lower after that, taking out the lows, taking out the buyers, right? And which made sense. So why does that make sense? Because, like I said, we wanted to see more downside into the 4-hour and the hour demand, right? So we had that 4-hour imbalance is basically what we were looking for. So it looks like this 4-hour imbalance right here. And then we had the demand candle we were looking for. And then we were looking for price on this 1 hour to potentially go down to here, right? So if price goes all the way down to, let's see here, sorry. So we have the 1 hour on the right, 4-hour on the left. And so what we were looking for was for that price to fill this imbalance like we did, 50% of this area, essentially like this. And we needed a little bit more for that to come down, I believe, from what we were where we were looking. So it came very close to that area, and so it just never filled the area. So in that sense, what we're looking for, like especially for like going forward until tomorrow, is like what we'll do when we get down to that 22,650 key level, right? So that's what happened for me is I was playing that position, tried that area during New York. That area failed, and then came back a little bit later. They ended up doing one very similar, uh, and this was like right. This was after my trade window, and this was on CFD. I ended up attempting the same thing. Price never could break obviously the supply, the sell side of the trade, right? So like tried the CFD in here, price went up, started to cover the position, price fell back down again because it couldn't get above that structure to start making any higher highs, right? And so the reason why I tried that CFD position was because essentially like here, right, they had these equal highs. So I was looking for price to potentially run back after drawing on that liquidity, potentially run back and go higher. Just was wrong, right? And so that's what the thing is. I think we're going to, targets I'm looking at are going to be key levels 22,650s. So something like this. And see what we do in that area. But more importantly, the big liquidity that's in my eyes that I want to see is and how we played it last week is right here, right? 22,550s because reason being is because when they came up and made this situation here, they ran the price up, they came and they drew on that liquidity slightly went up again, especially and they did this 30 guys. They did this in overnight. I remember this. So they went up in overnight where it just really pissed people off. And then they played the best position that we've seen that I love to see, which is capitulation bounce overnight trade banger, right? Was able to, secure that. And so now what they're essentially doing is just playing back to those individuals, right? From last Wednesday, right? Because this is last Wednesday. All right, so price, time, context, and location of supply, demand, accumulation, distribution is very key. But I do think that that's a key level for tomorrow. And like I said, noobs buy tops and sell bottoms, so they could get stuck, right? If price decides to break down. So if price basically breaks down into the range, right, we come into tomorrow, and then they start to do something like that, that would be interesting, but I just don't see it unless there's like I come into New York, price time and everything adds up and I have edge. But otherwise, I'd still want to see that price possibly down this area and just go a little bit lower. So let's take a look at all three here, and then we'll be off of here. But that's the way that I ended up playing it. And then I did want to show this because there's nothing wrong with inversion shorts, right? There's nothing wrong with them. It's just they get people trapped and clapped. Okay. And so like for me, looking at this, the one that I would see to short, I think would have been it depends on where you do it too. Like if you shorted ES, right, for example, if you shorted ES and you're waiting till candles are falling, right, and you're already when the momentum's going down, your dollar cost average isn't going to be as great. But if you're following the rules, right, like the only reason why someone would sell right here and get stopped out is because they don't follow their own rules of selling above New York Open in bearish conditions, right? So if you got stopped out here, it's because you don't have like some kind of restraint or something in your system, right? That kind of gives you more probability on those type of setups. So I still think this was great. You had the low, price comes up, kind of scoops right here, and then boom, makes another low. That's perfect, especially when you have equal lows, right? You had the 50% of the market open targets, so like here to here. We were looking for those areas, right? But then again, it's the typical target. Like getting here is easy, right? Getting below those previous day lows is what we really wanted to see. And so, like I said, if you took this 5 minute setup after 9 to 9:05 and then 9:15 to 9:30, somewhere in this area, I would have been trying to take that above New York Open. Say you don't get that type of sniper entry, which is fine. You had this 5 minute close, and price kind of came up into this area here where you could have put your risk on that low, on that high of like right above New York, and then played down to the same levels. All right. So those are going to work, right? When, obviously you have liquidity to the downside. But to me, there's no such thing. It's the same thing as a buy position. There's no real, no real difference in what you're seeing actually happen. It's just like if I was to flip this upside down, it'd follow the same rules of how we look for that RSV buy. So um, let's see one other thing here. And then last thing, so yeah, we'll leave it at that for NQ because like I said, just a bearish day. Pretty simple, pretty, self-explanatory on what it was. And like I said, looking forward into tomorrow, we'll see if we're going to push lower into those levels down here, or if we're going to hold these levels, and they've created lots, right? Lots of areas of liquidity, right, on the way back up to get now what would be yesterday was the HOD. This is now going to be the previous day high, right? So we'll watch those dailies, we'll watch those weeklies, those higher time frames, and we'll see what happens when we get there. One last thing I'll say too is, do we have news that could be injected tomorrow? Tuesday the 8th. Nothing really crazy. Wednesday is the FOMC minutes. So yeah, so we'll see. We do have some red folders throughout the rest of the week, but I would look forward for this tonight to come down to the 20,700s and start to attack this 4 hour, 1 hour range. So um, yeah, so with that being said, tomorrow we will do another DRC, right? And once we get to the 10th DRC, like I said, I will send out the document that you guys can follow along with, as long as you just message me on Instagram at SirocFX. So again, you guys have a good rest of your night, and let's have a good rest of our week.